what percentage would you say of carriers that you work with are closed to Lee County and Collier County right now?
So we write with pretty much every carrier in the state, non-captive carrier. So State Farm's just State Farm. And we've been losing a couple over the last year or two that have pulled out of the state or are gone insolvent.
Right.
I used to use the number 35 to 40 is kind of a ballpark. We've now got 6 that have come back up.
Wow.
And some of those, so one of the largest independent carriers in the state, they said, okay, we're open back up in this area. But their underwriting guidelines say we're not writing anything that's not brand new construction. So -1 if you've got a home that's more than a year old.
It goes back to your early comment, new construction, right?
Right.
Yeah, do a lot of that.
Yeah.
Wow. Well, this is Nathan Davis with the Community Lending Team with the More Than Mortgage podcast. I'm here with a few of my friends today. Frank Earhardt with John R. Wood Properties, and he's the broker associate there. And we have Troy Thornhill with Healthy Home Inspections, as well as Jamin Eastman with the Chapman Insurance Group. Welcome, guys. Glad to have you all with us today.
Thank
Happy
you
to be here.
Now, if you recall, we were actually supposed to do this together the week of the hurricane. So we're really not good luck for each other, the way I see it. But we're going to kind of come back. We're going to try this again and with a few different topics. Frank, we were actually talking about last time we were going to do this some processes that both of these gentlemen are really experts in and could really help. But now after a hurricane, well, those processes have maybe changed a little bit. And we thought, having Troy and having Jamin with us might help us to see where buyers and sellers should be aware of that process now after a hurricane.
Agree.
So, well, let's kind of jump right into it and see, kind of what's going on here. So, Troy, the way I look at it, you're kind of enemy number one for a seller. Anybody ever tell you that?
Yeah, I've heard it a few times.
Have you? Yeah. I've seen some of your posts, and I would hate to be a seller after you've done a home inspection. But no, seriously, you do a great job, and that's what your job is to find deficiencies, right? For a buyer.
Of course, yeah. I mean, and that's funny because a lot of times sellers do have that, feeling towards us. But by the time we leave, everybody's happy because we're there to do a good job and work in everyone's best interest. But a lot of stuff has changed since the storm. So these inspections have gone from traditional items that we're used to finding to uncharted waters. There's things that we're finding that we've never found before. Flood water is a big one that's affecting a lot of homes that, even remediation companies, they've dealt with floods before, but maybe from the refrigerator water line leaking, not necessarily from rising water. So a lot of stuff like that is new.
Yeah, I mean, you could probably go around, let's just say Cape Coral, for example, and you see homes that don't look damaged per se from the eye. You say, well, maybe there's a shingle missing or a little bit, here or there, but overall, you may say, wow, this house looks pretty good. But what are some things that you're kind of seeing, even kind of on homes that look pretty good to the naked eye?
Yeah, everybody goes and looks for the obvious stuff: the roof, the damaged pool cages, impact damage. I mean, that's all stuff that comes to your mind, from a hurricane. The thing that we're seeing a lot that people are missing is the hidden moisture. People would be amazed if they knew how many windows leaked where you don't actually see water stains. You don't see moisture. But when we go through and we're checking these windows with a moisture meter or with infrared, check for temperature differentials, we're finding hidden moisture. So that's a big thing. We're doing air quality tests on almost every house now.
Oh, wow.
Just to be sure, because if you have hidden mold, it may or may not show up in an air quality test, but it's another tool for us to use to ensure that buyer is not buying a home that has hidden mold.
Yeah, and there may not be signs that there are visible signs of any mold anywhere either. So, like you said, if you took on some water, baseboards may have been pulled off and dried out, but you don't know what's behind the wall or behind the cabinets.
Yeah, and another thing on that is there's so many different contractors out there that do so many different levels of work. Some of them are fantastic, others are learning. Others, and it's unfortunate, and there's people out there trying to help, and they're doing their best, but a lot of times maybe the best isn't quite good enough. A good example are tile floors. I mean, if a house flooded and you have water under your tile floors, it clearly states in the IICRC water restoration standards that that type of stuff should be removed. You can't dry it. So when people are trying to cut corners because they don't have the money, it's unfortunate, but there are things that have to be done.
So do you recommend, say, if I'm a seller of a home that I maybe have my insurance company come out, they've done their inspection, maybe I even have a public adjuster, but I mean, what would you maybe do differently than maybe one of those adjusters might do that would be really helpful to the seller so they don't have any surprises during the process?
Sure. A lot of times the adjusters are well trained, but they're stuck with 100, 200, 300 homes and they're on a deadline.
Sure.
So they're trying to get them done as quickly as possible. And some of them are really great adjusters. Others are not so good. So we may come in and find things, like I mentioned, the hidden moisture around windows. Almost every inspection we've done as a third party, we've found items that the adjusters did not find.
Wow.
And, most insurance companies are cooperative. They'll say, oh, I'm sorry, our adjuster didn't find it. Let's just submit that third party report and we'll include it in the policy or the claim.
So you're an insurance policy for the insurance policy.
I would, that's a good way to put it. Yeah.
That's good. No, I really appreciate that information because even for myself, my home is damaged and I think I know what the damage is. But now after talking to you, I'm going to go home and tell my wife, I think we need to have Troy come over and check some things out and see if we've got some hidden things, because like you said, unless you're going to go crawl around, all throughout the house, sometimes you just can't see it, or maybe you can't even see it until you start pulling some things up.
Yeah. Now's the time to do it before that claim is done and paid. And then you find it later and then it's too late.
Yeah.
So get it done before you finalize that claim.
Well, Frank, we have Jamin here for insurance. You have some questions maybe that Jamin can answer for us?
Yeah, insurance was one of the things that we always have to do with 99% of the buyers. And oftentimes it's one of these last minute things that buyers end up doing. And so now with what's happened, we actually encourage people to start talking to you almost immediately once they are under contract or starting to go under contract. And so, I think a lot of these homes may not be insurable, as we were talking about earlier. And, how hard is it to get insurance right now on a home that looks good and a home that is definitely damaged?
Yeah. So insurance has been increasingly difficult to acquire at a reasonable rate, good coverage at a reasonable rate for a couple of years. Now, Hurricane Ian certainly accelerated, a couple of years of exacerbated eligibility problems and future costs, I'm sure. But it's been a growing problem, and oddly enough, it's only secondarily related to hurricanes. Right? Everyone figured, Irma came through, caused a bunch of damage, more down south. Ian was a little bit north of where Irma hit, and now we're going to see the same thing with Ian. Actuaries, the people who are actually creating the rates for insurance companies, they can forecast storms and forecast damage based on historical trends and kind of seeing where things are going. What they can't forecast is fraudulent and excessive claims. And that relates to how the state of Florida allows litigation to play a part of the claims process. If you look, Frank, I know we've talked about this a couple times over the last year or two, but if you look nationwide, Florida homeowners policies account for 7-8% of all homeowners policies. But when you look at homeowners insurance claims that involve litigation, nationwide, we're 80% of the total.
Wow.
So anytime there's a huge disparity. And that includes California. California's got its own problems, but we, far outweigh any other state in the country. So the cost and availability of coverage has been increasingly difficult. What you see anytime a storm is even headed our direction. So Hurricane Nicole rolled through last week. Mm-hmm. Everyone kind of knew it's coming in from the other side of the state. If you've lived here for long enough, it might make landfall as a Category 1. We weren't too worried down here. But companies statewide start shutting down, some as much as a week in advance.
Wow.
So you get a week or two before Hurricane Ian made landfall. Companies just, we're done. We're closing our doors for new business. We're going to get ready for this storm. Just brace yourself. So that affects closings. It affects potential future availability of coverage. And then once the storm passes, it may take them a while. If you had, as an insurance carrier, had a large footprint in whatever area was impacted, it may be months or years before you really decide we're ready to open up for a little bit more capacity, because you got to figure out how much do we actually lose.
Right.
And the creep on losses can take 2, 3, 4 years before it's really fully realized.
What percentage would you say of carriers that you work with are closed to Lee County and Collier County right now?
So we write with pretty much every carrier in the state, non-captive carrier, so State Farm's just
Yep.
State Farm. And we've been losing a couple over the last year or two that have pulled out of the state or are gone insolvent.
Right.
I used to use the number 35 to 40 is kind of a ballpark. We've now got 6 that have come back up.
Wow.
And some of those, so one of the largest independent carriers in the state, they said, okay, we're open back up in this area. But their underwriting guidelines say we're not writing anything that's not brand new construction. So
Wow.
-1, if you've got a home that's more than a year old.
It goes back to your early comment, new construction, right?
Right,
Yeah, do
right.
a lot of that.
Yeah.
Wow. Now, let me ask you this, Jamin, because I've seen this come up before. So if we look at, all of Southwest Florida, there's a large percentage of people that have had some level of damage, and they may have opened up a claim just because they want to start that process. They may or may not really need to, follow through on that claim because of deductibles and what the real damage may be until Troy comes and tells them something different.
Mm-hmm.
It's a little larger than you thought. But with that being said, if I'm a seller and I have an open claim with my insurance company and I'm wanting to sell my home, and maybe I'm planning on taking care of all the damages before closing, can a buyer come in and get insurance on that same home when there's a claim that's already opened up?
Sure. It's going to create challenges. And to back up one step, anyone who's even thinks I might have some damage, even if it's not visible, open up a claim. This was too widespread, too significant an event to just kind of let it go. Because like Troy said, can be a huge difference between visible damage and actual damage. So you want to get in and not, I don't want to have a claim on my record. So I'll just kind of let it go and then realize I'm setting myself up for a big problem or a potential buyer.
Is there a time frame as to when you can open up a claim for a storm?
So it used to be 36 months from the date of an event. The DeSantis called a special session back in July to address a couple of things. They came in with a list, crossed a bunch of stuff off, and came out the other side with another list. One of those changes was they changed that time frame to 2 years from the date of the event to at least initiate a claim.
Okay.
You can still, like Troy said, sometimes the adjusters will come out. They're not using real-time price estimates, and they may miss some things. So you can certainly go back and reopen a claim once it's been offered, after you have inspectors and contractors coming in really looking at the cost. But 2 years from the date of an event.
Okay.
Touch on that a little bit from Irma. We worked mold jobs for almost 2 years after Hurricane Irma.
Oh, wow.
Irma was nothing compared to this.
Yeah.
So you can imagine how much stuff's going to go on for the next couple of years with claims being opened back up.
No doubt. Yeah. And again, your job was important before a hurricane, right? I mean, buyers needed to have an inspection to know what was going on with that house. But it's even more so now because of this hurricane, because there's so much more that you have to take a look at. And obviously, Jamin, your job was very important before too, but now even more so because people have to start that process. As Frank pointed out, people would wait 10 days before closing to decide for their insurance. I mean, they should almost be talking about the insurance before they even talk to me. I mean, well, no, don't do it that way. But really, I mean, it's significantly changed the whole dynamic and process of what the two of you do.
Well, there is another factor too that plays in too. So we used to have a pretty good idea of what a policy would cost for a 3-2 home that's $500,000.
Yeah.
I wouldn't even throw out a guess right now what somebody's going to pay. And so if somebody's on the edge of being able to qualify for financing, if they're thinking it's going to be $3,000 a year, in reality it's $6,000 a year or some semblance of that. You're going to want to know that earlier than later.
And that's just the homeowner's insurance
Right.
side. FEMA made, this is a separate show, but FEMA made major changes last October where I used to say the same thing. Newer construction, $1,200 a year, plus or minus your flood insurance. Now in the Cape, especially, if there's not an existing policy, $4,000 or $5,000,
Oh.
I mean, it's it's a nightmare.
Well, I actually have an example. Jamin wrote my flood policy. Had I started my construction before October 1st, it was going to be about $960 a year. Because I started after October 1st when FEMA reset the rules, I'm now paying $3,600 a year.
Oh, ouch.
Yeah.
Oh, well, we'll put a GoFundMe link on this podcast for you, Frank. Wow, I'm sorry to hear that. But it is the reality of what a lot of our buyers are facing out there right now. And so obviously, in the financing world, we have our own set of challenges as well, after a hurricane. So maybe I'll share. You want to hear some of that?
Yeah, I'd love to hear. I mean, so what are the challenges now with financing a home post Ian?
Well, things were tough enough as it was, with rising interest rates and things like that. But now we have some of the similar issues that we've already talked about with Troy and Jamin, as far as homes being damaged. How do we finance a home that's damaged? Well, one of the things is once a FEMA defines a county as a disaster area, big red flag goes up in our industry on, okay, if you're in Lee County or you're in Charlotte County, now every single transaction gets scrutinized. And so we were having to do on homes that were closing, say a week after, even if they didn't have any damage, we still had to do post Ian disaster inspections. Send the appraiser back out, go take some pictures, make sure the home's not damaged. Oh, we see some damage. Now what do we do? So every single transaction just got scrutinized, and it slows the whole process down. It is frustrating, but I mean, we understand for some of the reasons that we've already talked about. We wouldn't want a buyer to close on a home that really ultimately, they may have a lot of costs that they're going to suddenly inherit because, maybe something didn't get caught, or maybe just because everybody wanted to close. So, that's something that we've had to pay attention to. In fact, Frank, we had a transaction that we got an appraisal waiver. So we never even had an appraisal done. So there were no pictures to speak of on this home, but we still had to do a post-disaster inspection. And, again, it showed that there wasn't any damage, but we still had to, go through that process, and it slowed everything down. So, it's something that we have to kind of keep in mind out there, is that even if the home isn't damaged, there's still a process that's in place for lenders, after a hurricane.
So a question for both of you guys. And so let's say there is some minor roof damage, ridge shingles are gone. And so roofer can't get out there for 6 months. And so can we escrow that money for you and for you? Or, can I get insurance and can I get financing because I'm missing some ridge shingles?
So you want to go first?
I'll start with mine's more complex because, obviously I'm going to answer for our company, Community Lending, but, every lender probably has a slightly different policy on this because there really is no one size fits all. We do have an exception basis for post-closing escrow for what are defined as minor damages.
Okay.
So what are minor damages? Well, it's easy for things like pool screens, pool cages. In fact, we closed one where the pool cage was, damaged, but, we've got estimates for it. It was within the threshold dollar-wise that we could close on. Roof is a little bit of a bigger challenge because what most people will do is they're going to go throw a tarp on it. So now when I go to do a post-disaster inspection, which I have to do, or even if it's now just the appraiser itself takes a picture of the house and it's got a blue roof. So now how do I identify this as being minor damages? There's no real way to know that.
Right.
So oftentimes if it is minor, we're encouraging to try and get the roof repaired, get the tarp off of it, let us do our job. And then, ideally work out things from there with regards to, closing. So it may be something that they have to kind of work out between a buyer and a seller on a closing cost credit or something like that. Again, the roof may not need to be replaced. Maybe it does, but that's where I'll kick it back to Jamin, because that's, again, determination on that can be kind of challenging.
Yeah, and we get a little bit of a pass on this question, like we were talking about before. If the damage is significant enough, it's not going to qualify for a conventional loan anyways, right? You're not going to sign the waiver on a home that has a roof that's caving in on it. So in those cases, we write a builder's risk policy or something that provides temporary coverage while repairs are being made. It's not going to qualify, satisfy the underwriting requirements of the conventional mortgage, but in those cases, we're dealing with a cash buyer or maybe a renovation loan or new construction if it's a complete loss. This is where the availability of carriers is really hurting us, because there's always been kind of some creative solutions to those kinds of problems. I need, really from the lending standpoint, in a conventional loan, I need the dwelling cover at actual or at replacement cost coverage up to whatever the appropriate limit is, right? The value of the structure. But those provisions allow for a depreciated loss settlement for a roof that may need to be replaced or repaired. Those products aren't as widely available as they might used to be. So if we have repairs made and we can get a 4-point inspection that said, hey, listen, the roof isn't in great shape, but it's got 3 years remaining life left with no noticeable deficiencies, sure, we can squeeze it into a Citizens program or something like that.
Yeah, with Citizens, if I understand, if the home's built after, is it 2003, they just require a picture of the front and the back of the home. They don't require an inspection, or is that wrong?
So if requirements are 20 years,
Okay.
at 20 years. So 2002, soon to be 2003. However, as an agent, I'm saying there's too many potential areas. So I'm saying just go ahead and get a 4-point.
Yeah, gotcha.
Get a 4-point inspection.
What about the roof certification? So if we have a roof that was slightly damaged, this was an issue before the hurricane, just roofs in general. Let's say that we could put that it has 5 years of estimated remaining life, but maybe, it says there's a checkbox on there. Are there any damaged or missing tabs? Mm-hmm. It's a yes or no question. There's no gray area. So we have to check the yes box. But if we can put in the notes that this roof has 10 or 15 minor damaged shingles, but overall it's in good condition, can you still write a policy?
So those need to be reviewed on a case-by-case basis. Okay. Citizens has always had some provisional allowances where maybe a roof is in horrible condition, not actively leaking, but we've got a signed contract in place with a roofer who's going to do the work, and we've got a deadline of a month or two. We can submit that over, and they'll look at it and say, okay. The same thing for repairs. If there's minor repairs that are necessary to substantiate the 3 years or 5 years, whatever it is, we can submit that to say, okay. The biggest problem right now is already leading up to Ian, there were more than enough cases that carriers stopped making exceptions where we had a roof contract that said, yeah, it's going to be on in 30 days. And 6 months later, we're still waiting for tiles to show up.
Right.
We've got the buyer begging us, hey, we're going to replace the roof as soon as we close. Just write us a clean report. Well, that's fraud. And that's on my license. So I want to help you out. But at the same time, you don't want to get dropped by the insurance underwriter. And now you've got that stigma. You've been dropped because everybody was not honest.
So it seems like what we're learning here is case by case is really a common theme. We can't kind of write a broad brushstroke and say, well, this applies to, all of these scenarios. And again, it's kind of, it slows the process down. It frustrates buyers and sellers because it creates an unpredictable result, right? So, it's just something that we got to get used to post Hurricane Ian.
I can't say a universal truth, right? We're dealing with case by cases all over the place today. A universal truth. If work with local, reputable contractors. Anytime you have a storm, you're going to have a whole bunch of roofing companies and disaster cleanup companies and move into town. They may be legitimate, but a lot of them will take advantage of the situation. And especially if you're looking to sell a home, if you are waiting for repairs to be made in order to transfer that property, I can promise you, if you get a roofer knocking on your door who's saying, sign this contract and we'll go to bat for you, the insurance, you're going to be waiting for a year or two if you're lucky. Work with reputable, good contractors. They do better work. They're usually more cost effective anyways, and you're much more likely to get the home repaired and in saleable condition.
Yeah, very good advice. I mean, they have a reputation. They want to stick around in Southwest Florida, so they know they got to do a good job. Otherwise, they'll run their business on the ground here. Somebody from, say Louisiana, who, may be a reputable company, but, if things don't kind of go too good for them, they can just, pack up and head back.
They're off after the next storm.
Off the next storm. Yeah, exactly. Yeah. Well, hey, I have some good news. You want to hear some good news? Yeah. I mean, mortgage rates were climbing to levels that we hadn't seen. I mean, I've been doing this 25 years. And I hadn't seen these types of rates, since probably the beginning of some of my time in this industry. We were running in about the mid sevens, for a 30-year fixed mortgage. Right. And most people are getting mortgages where, never seen rates like that ever.
What was it a year ago?
Well, I can tell you December was rates were around 4%. Yeah. So a year ago, they were probably in the threes. So, I mean, that kind of level of increase in that short period of time is one of the reasons why, the market had started to kind of stall a little bit. Even though there's a lot of cash buyers, it's hard to get a finance buyer who's really excited about, a 7.5% interest rate. Oh, by the way, in a rising, price environment at the same time. But the good news is, here's my prediction. Okay. Mark it down, that I think we've seen the peak of interest rates. That we're starting to see things actually come down. I mean, they're having a hard time holding the downward momentum right now, which doesn't surprise me, but we're seeing rates just in the last week kind of getting down around the mid sixes, upper six range. And, we're doing, some 7-year fixed arms to kind of help some of that along with 30-year fixed. The other thing we're doing a lot of now 2-1 buy downs. That's something that probably a lot of people, hadn't heard of, but actually the builders have used this technique for years when especially they get a lot of inventory that builds up. They want to sell some spec homes. They like to advertise payment or advertise rate, something that's much, much lower than what you see on the market. Well, they utilize a 2-1 buy down. And it's basically you take the rate that's out there in the market and let's just say it's 7%. Well, they're offering a 5% rate for the first year, 6% rate for the second year, and then the 7% rate for the life of the loan. And that's how they would get a lot of people, into their doors and buying homes.
Qualified.
Get them qualified, all of that. So, we're kind of starting to use those same techniques. So now they have to be seller paid. So again, this wouldn't have worked, 6 months ago, 9 months ago when, the market was just doing this and everybody wanted only cash and wanted, oh, by the way, 10% over what I'm asking. With the market kind of seemingly settling down, buyer or sellers, I should say, are a little bit more open to seller concessions. And if somebody says, well, I'm going to offer, 5% below list price for an offer, well, it's a tool that actually a seller can go back and say, well, maybe we can do this 2-1 buy down. It may only cost me half of that. And it's attractive to a finance buyer. So we're trying to become a little bit more think outside of the box. So, I don't know, Frank, if that's something that you see as helpful, but that's a little bit about what's going on in the market right now.
Well, the affordability is always an issue and has been down in Southwest Florida now for a couple of years. And so I think something like that definitely could help. The rent prices have just skyrocketed with the storm. They were up already. And so with as many people that are as displaced as there are right now from Fort Myers Beach and Sanibel, good luck trying to find a rental under $3,000 a month really right now. It's just, it's that crazy.
Yeah.
And so, on the marketplace, we are starting to see a little bit of an increase in inventory. So homes are going to starting to go on the market. I think between Thanksgiving and Christmas, which historically has been a little bit of a slower time, and so as people start to focus on the holidays and Thanksgiving, and I think there's going to be a lot of conversations over the dinner tables over the next couple of weeks of, do grandma and grandpa stay down in Southwest Florida, or is it time for them to get closer to family? What are they going to do with their home? Again, historically, January is our highest month of inventory. So we'll see if that trend continues. I anticipate that we will see an uptick in inventory. We're starting to see damaged homes come on the market.
Okay.
And so you see pictures in the MLS now of homes that have 4 feet of drywall cut out, 8 feet of drywall cut out. And so and those are going on as is, and they're looking for cash buyers. And so almost within days of the storm, we were getting calls for people looking for fixer-uppers.
Oh, really?
And so I shared an example with you gentlemen earlier. Damaged home, didn't have flood insurance, older lady, didn't want to put it back together. Probably takes 6 to 9 months to find a contractor to put it back together. And so we put it on the market at a good value for her, a good value for somebody buying it. We had 8 offers the first weekend, and we closed in 7 days with a cash buyer.
Wow.
So buyers are out there. The other thing, Cody, maybe you can put this on later too. This is a map of what the temperatures look like this weekend.
Another universal truth.
Yeah. I think Cody can just pull it up on the news channel.
It's I think the Buffalo Bills game, they're thinking 1 to 2 feet of snow this weekend.
Oh, wow.
Snow is always a good motivator for people to move out of East Coast, Chicagoland, Midwest, and come down here.
Yeah.
So it snowed in Chicagoland this weekend. It's going to be cold everywhere.
Look how blue that is.
Yeah.
I mean, even a little pink. Yeah, that's probably not a good sign, right? Oh my goodness. Wow.
So, and people have a short memory as well. So if you drive now through, other than Fort Myers Beach and Sanibel and Pine Island, if you're in Fort Myers or you're in Cape Coral, life has gotten back to somewhat normalcy. And so there's still debris on the sides of the roads, but the restaurants are open, the schools are open, most businesses are open. So there is some sense of normalcy coming back to the community too. And so, for every one buyer that wants to leave because of the storm, there's probably two buyers or one seller that's going to leave. There's probably two buyers coming into our market. So I do anticipate that after a little bit of buyers realizing that it's not going to be 2008, prices aren't going to get slashed like they did back then. Buyers are still going to want to come down here. Sellers have to take a realistic approach.
Right.
So the market has changed from spring when you're getting 8 or 9 offers for every time you put a sign up in a yard. That there are buyers out there, but they're also not looking to overpay. And so,
well, it sounds like there's maybe some light at the end of the tunnel here for the real estate market between rates coming down a little bit. Obviously, you mentioned it's going to get cold, up north, so people are going to still come look at Southwest Florida. Been very impressed, as you said, with kind of the cleanup efforts. It seems like some lessons learned maybe after Irma and some of the other storms. So, a lot of blue roofs, but you can get used to that after a while. So, well, I tell you, gentlemen, you have shared some really important things for our buyers and sellers out there and what they need to pay attention to as far as, getting their homes inspected properly, thinking about the insurance well in advance. And always appreciate Frank sharing with us what's going on in the real estate market. Troy, could you maybe provide your contact information for our listeners out there?
Sure. Yeah, you can always go to our website, of course. It's healthyhomeinspectionsfl.com. Call our office anytime. It's 239-220-5107.
5107. Excellent. Okay. Jamin, how about your contact information? Will you share that?
Sure. So I'm with Chapman Insurance Group. Again, we've got 5 locations between Charlotte County and Collier County. The easiest way is go to our website. It's www.cigflorida.com. And you can pull up the location nearest to you if you wanted to reach me directly. Email is generally the best way. It's Jamin, Jamin, @cigflorida.com. Or you can call our main office at 239-205-2012.
Excellent. And Frank, for all our buyers and sellers out there, how can they get a hold of you?
Yeah, our website is johnrwood.com is probably the easiest way to find us. And my direct number is 239-896-3437.
Okay. And I'm Nathan Davis with the Community Lending Team, 239-898-8841. You can catch me on my website at agentslender.com. Thanks for joining us today here on the More Than Mortgage podcast, and look forward to talking to you guys again soon.
Great. Thanks.
Thank you, guys.
Thank you.